Welcome to TheoTrade. This is Don Kaufman. You are watching the Theo Night video for January 28th, 2016. I'm recording this a little bit later than I typically do. I wanted to see some of the earnings kind of play out today. I mean, two major ones came out, Amazon, Microsoft. The only way, though, to really start off tonight is chaos in the markets. I had to bring this up because this is just a one-day, 1-minute chart on the S&P futures, and don't even worry about any individual products right now. You got to look at the futures to appreciate what is going on, and I call it chaos in the markets over here. But again, this is in the middle of the night. This is before trade really kicked off today. In the middle of the night, we're trading at almost the 1892 level. Came down to our favorite number. We've been talking about this a lot. Literally came right down to 1871. Rallied up above 1900, came back down. You thought the world was going to end. I mean, this is at the cash open. And by the way, in the middle of the night, over 500,000 contracts traded. That's a crazy number right there, all right? We come down, it felt like the end of the world, but stop. No, there's more. That was at 1866. We rally back up, fade again, rally up, and the rest of the day, everybody just threw their hands up and go, I'm tired of this. But again, it was chaos in the markets. If you trade on an intraday basis and you were watching this, I mean, you're just like, you're exhausted by the end of a trading day. At least I felt that way. So that's just, again, a little bit about some of the intraday trade. The confusing area right now, and I say it's a little bit of chaos. First of all, we're in a really, really tight range. The confusing area to me, it's the bond trade. The bond trade is an area that's still making me really, really nervous. Why would I be really, really nervous? Because the bonds have rallied and are actually still kind of grinding, albeit slightly higher. So you've heard, there's lower lows and higher highs. Well, this continues to make slightly higher highs, albeit minimally. We're still kind of creeping up in the bonds. Now, if you want to see risk abate in the marketplace, and I'm talking about in the S&Ps, you want to see risk kind of cool off a little bit. Yeah, you need the bonds, back down the 157, 156 kind of range all the way down here. Yeah, we're nowhere near that. And I don't like the trade in the bond right now. And I especially don't like the fact that it's doing it on some decent sized volume. Or if you're into notes, the same animal. Maybe you're not even into notes and you have no idea what notes are, but every day they're inching higher. Okay. The notes, technically speaking, are even more important than is the trade. Okay, in the bonds. The notes of the 10 years, this is the one that's really moving interest rates. This is what the entire financial world, this is where they dive when they think is risk. Okay, so I have tendency to talk more about the bonds because that's more retail friendly. But the notes, the 10 years, the /ZM, that's where the world goes, okay, when they want to mitigate risk. And if you want it to be really more like trade friendly. Again, I'm talking about bonds and notes. You're like, I don't know about that. It's all right. You can look over at the TLT, and the TLT continues to kind of break out to kind of higher highs, although it's not as emphasized maybe as looking at the pure product, and the pure product is the bonds and the notes, which of course brings me to the financials, which right now really can't get out of their own way, but neither can the S&P. So when you swing back around to the S&P 500, okay, and you take a look at the S&P 500, the one thing that I want to bring into perspective is that ultimately what we've done this week. What have we done this week? So it's Thursday, late afternoon, okay? We're coming into Friday. What have you done? 1, 2, 3, 4 trading sessions, 5 trading sessions. If you want to count last Friday, what have we done? Nothing! Has it taken maybe a year or two off your life? Probably. But the point I'm making with this, if you looked earlier in the week, and I set this up already, this, ladies and gentlemen, is earlier in the week. What I did is I went back into Think Back. Here we are on the 28th, okay? I actually originally had moved it back to even the 10th to display. Look, we were at 1922. Where are we currently in the SPX? 1893. It's only been like a 30-point move. Okay, so my whole argument has been for the last couple of weeks, in volatility, what do we do? The moment we identify that, well, things are coming volatile, there's chaos abound, what do? We sell premium and stay the heck back. So that's one of the reasons I brought that up. So now I'm going to go to this Sunday. Okay, this is the previous Sunday. Here we are on the 28th. This is looking at the 24th. And the reason I brought that up is we started the week at 1906. Where are we right now? 1893. The expected move denoted that we were going to move plus or minus $50. Did we do it? Uh-huh. Did we go anywhere? Uh-uh. So week's not over. Okay, still plenty of time to dip into the expected move, but we've actually stayed nicely in the expected move the last few weeks. So we had this like wild move in the first week and a half after the beginning of the year, okay, where we just started blowing through expected moves. And really since then, okay, and coming right into this neighborhood here, since of course about January 8th, January 9th, we've been, all right, in a relative range. That's what we would expect. Every week we've been seeing about $50 expected moves. Well, that would take us from 1940 to what? Into the 1890, but this is multiple weeks. Every week we're afforded the ability to sell premium. Okay? If you're not doing it, you're starting to miss the boat. Premium is where it is at. Last but definitely not least. Oh, let's just show you the obvious. Okay, what is the obvious? Microsoft comes out with earnings. Does it matter what they are? The stock's up $2. Now, the expected move was $3.20, so it's well within inside its expected move. It probably would have been, okay, a spectacular earnings report if it hadn't been for another stock that came out with earnings and kind of threw cold water on the Microsoft party, and that was Amazon. So Amazon today, now this is kind of a wild day. It moved up $52, but in the after hours, it's trading at $5.50. So wait, when you do the math, you're like, it had a $50 expected move. All right, it starts the day, and you got to look at this to even believe it. Okay, so let's go to like a 1 minute. It starts the day here. It actually touches 600 here, explodes a ridiculous amount, and then decides I'm going to die a horrible, horrible death. So again, the overall range is, nothing less than phenomenal inside of Amazon. By the way, Amazon, for those of you that are not aware of this, it's like the bane of my existence. I order stuff from there, but I'm not a fan of the business model. Let's lose money and make it up in volume. Okay, moment of silence thinking about that one. Lose money, make it up in volume. But they still had one of their best quarters in their existence as a company. I think they made money. It's a miracle. Okay, by the way, you always got to look at the PE ratio inside of Amazon. Oh, don't worry, it's only 916. That's, nothing insane. Okay, apparently PE ratios, they don't matter at Amazon. Anyway, with that, I have to speak nicely of them because, well, I use their cloud. Nice cloud. Nice cloud. Didn't say anything nasty about the cloud, just the fact the company likes to lose money. Anyway, with that, I think it'll be some nice wild trade in the morning, only because, again, it was a $50 expected move, and what do you really make of this? The thing trades to 635 and all the way down to 550. So again, a little bit of chaos in the markets. So the overnight trade last night was all over the place. And the overnight trade, I'm not talking about individual equities, but it's still a market about index products. Now, if you're looking for like China to move, okay, it's not, all right? So Chinese markets are going to be, really, really down for almost the next week over here. It's the Lunar New Year, so you're not going to expect much out of that. You can see like, Japanese markets and the futures will start moving over here. Nevertheless, you're not going to get much from some of the overseas markets, of course, until Europe opens. But again, last night, some of the trade was nothing less than phenomenal inside of the S&P futures. And one thing I often look at, the contract just reopened here. It's doing like 13,000 contracts, nothing too crazy out there. Hey, what can we expect tomorrow? I have to tell you, I still see risk everywhere. Okay. Now, we've tried to rally time and again on the S&Ps, and we really haven't had that quintessential rip your face off rally. I know you were thinking last Friday, it felt like it until Monday it came back. But again, you still kind of need that recovery rip your face off rally, which is an explosive rally. And that's a term that's been used for decades in the markets. The only issue is every time that we try to rally and we fail, and we did it today. We failed a rally again today. Look at the range. Okay, and I'm going to go back over to the SPX to effectively denote this to you. But if you look at the range that we traded in the SPX today, again, it's just nothing short of phenomenal. Yeah, we moved up a little bit, but we failed again right at the 1900 level. A couple of days of failure, and you can get a market that the bottom can just drop out. So we're stuck in this catch-22 over here. We crack above maybe the 1911 in the S&P futures level, and we could run a little bit to the upside, maybe close to 1940. But we are still left with those bonds being elevated. Okay. And tomorrow, when you come into trade, if you see those bonds elevated over here, put your helmet on, because undoubtedly, you see this market wanting to test lower, okay? And it's been fading off the rallies over here. So, 1850, but you still have to be thinking in the back of your head, we could have a wild day where we drop into the 1800 level and then some. So we're nowhere near any type of capitulation. Okay, we haven't seen, the big, let's barf all our positions up over here. Again, this is volatility, people. Okay, if you think it's uncertain, you just wait. We're just getting going. With that, I want to thank everybody for joining us here at TheoTrade. We'll be back with a weekend edition here. Enjoy your Friday of trade. Bye-bye.